It left right out. The market's open. It looks like it's you're pretty much flat anyway. I wanted to reiterate, what I saw yesterday in the S&P 500, or I mean, it's an accumulation over a number of months. But I just happened to pull up that chart. It looked like a head and shoulders, and we're forming that right shoulder. I mean, that's a technical thing, but we're also getting some pretty nasty, or I wouldn't say nasty. The data is always manipulated, but it's pretty bad regardless. So ADP says that we got lost like 300,000 jobs or something like that. I don't know, I just saw the headline. I try not to really pay too much attention to that because we know what's going on, and you should as well. That the manipulation of the market is in full swing, but eventually, as much as these guys want to manipulate it, the direction goes the way that the market really needs it to go. And in this case, to me, it feels like unless the Fed does some kind of reversal, we're going to have that correction. I'm not saying a crash. I'm listening to somebody on the radio. It's calling for an absolute crash right now. And believe me, there is going to be a crash. And I think it's when they come back in, if it's going to crash at all, you're going to have, and it's not going to be a crash in the sense that we're kind of seeing what the crash is going to be like. It's not necessarily going to be Mad Max or anything. But if you study and look at these other countries that have currency collapses and other just bifurcation of the social structure economically, you can kind of get a sense of way that's going to look here. And the way we're kind of in slow-mo, we've been doing it slow-mo for like the last 20 years especially, where we are in a state of collapse, or I call it a depression. But it just is, it's gonna occur. Like we've gone slowly all this time, and people are just now starting to realize it, but they're laying the blame on something else. When we do have an actual, like a vacuum suck down, then I guess people will realize what's going on. It's too late by then. But hopefully we have the right people in charge. It doesn't look like we do. They will understand the problem. There's not too many Rand Pauls or his dad or running around with it, or Mike Lees or Thomas Massey that understand the situation in depth from an Austrian perspective or a free enterprise perspective, and just understand the monetary side of things, not only the social dynamics, the laws and whatnot, but the monetary economic deal. But anyway, yeah, there's not too many guys running around, so I don't have a whole lot of hope. But I'm just brought that up because I was listening to someone on the radio like telling you to go get canned goods, which I respect the man. But and it's not bad. You need to have something stored, obviously. But I don't think we're going to have like this huge, complete economic meltdown yet. I think that comes with the currency collapse. That's when you have that. We haven't got that yet. Like I said, you pay attention to the debt market. People are still putting money in the treasuries, which are dollar-denominated assets that are backed supposedly by the U.S. government, which is really just backed by us and our ability to produce anything. So once that breaks down, the currency, which it will, I mean, if you're a foreign nation, do you really want the U.S. dollar? What are you going to get for it? Well, right now you can still get oil. You can still get some goods and stuff if you bring it back over here, and then the other thing, you roll it in the treasury. So it will happen. I just don't think it's going to happen right now. You will have a correction though. I'm not saying that. That's why I'm looking for that. I'm looking for a big swoop down in the stock market, because we want the stock market to more reflect what's going on in the real economy. Excuse me. And it's not. It hasn't. That's what happens when you have inflation. And I'll reiterate it again. Inflation is a monetary phenomenon where the money supply expands. It is not rising prices. That is a symptom. And I heard a conservative radio talk show host yesterday, and he even used analogies that really accurately portrayed what inflation is. But the classical sense of the world, or the Austrian perspective, it is a monetary phenomenon, and it's a greater capacity to explain what goes on. So the rising prices or the rising asset prices in the past, those are symptoms of the inflation. They are not the inflation. That's like saying the fever is the flu. The symptom of the flu is the fever and chills and all that, but it is not the flu. That's a reaction to the flu, and that's what we see here. It is the attempt of the market to actually find some sort of equilibrium within the new paradigm of this virus, which is called horrible monetary policy. But anyway, I want to get back. S&P 500, I looked at that. Not to say it can't go up. Technical analysis is always prone to at least a little hints of a little probability of not being right, even though this looks like a classical head and shoulders pattern. And then I don't know where the support level is. I said I was going to look into it. I didn't. I've just hedged myself to take advantage of any kind of move downward a little bit, because that's how I make a living at the moment, is kind of trading this and doing some little odd things here and there. But we'll see. We know something's going to happen, because as we get closer to that March time frame, where the Fed is going to either make it or break it, raise rates, or get the QT rolling out, completely gone, which we don't know what's going. I don't know what's going on there. Do you know what's going on there? Because these guys supposedly we got QT going on, but their balance sheet keeps going up like significantly, $100 billion or whatever it is. But anyway, I'm gonna leave you there. Just a little morning brief, and we'll pay attention. We'll see what else is going on in the world, and I'll talk to you later. Peace.